Hey everyone, welcome back to First Wealth, your go-to channel for everything crypto and financial freedom. Today's video is a big one, Crypto Crash 2025 and what's next. If you've been watching the markets, you know things are looking rough out there. Prices are tumbling, investor confidence is shaken, and the entire crypto space is grappling with one of the biggest downturns we've seen in years. But don't panic, because in today's video, we're going to break it all down. We'll take a look at what's causing this crash, how this might reshape the crypto world, and most importantly, what you can do moving forward. Make sure to watch until the end for actionable insights that could potentially give you an edge during these turbulent times. What's happening in 2025? Alright, first things first. What's actually going on with this crash? Why are we seeing such a significant downward spiral in 2025? For context, 2025 has brought with it a perfect storm of factors that have tanked the market. Tightened government regulations across the globe, declining retail interest, and whispers of major crypto funds collapsing under unsustainable leverage have created this domino effect. Add to that the macroeconomic climate, rising interest rates, and the lingering effects of global inflation, and you get the picture. Crypto is not in isolation. It's very sensitive to broader financial systems. Another big cause? Over-reliance on speculative projects. While the last bull runs in crypto markets fueled massive innovation, they also led to reckless investments in projects with little to no real-world use cases. When those projects began failing, confidence took a hit across the board. Lastly, we've also seen massive sell-offs this year in Bitcoin and Ethereum, the two giants of the space. Both institutions and retail investors are cashing out due to fear and uncertainty, and this has only contributed to the plummeting prices. Historical context. How does this compare to previous crashes? Now, you might be asking, haven't we been here before? How does the crypto crash of 2025 stack up against previous downturns? If you're finding value in our content, smash that like button to help us out with the algorithm, and leave a comment after the video and share what you'd like us to cover next. Now let's get back into it. If we look back at the infamous 2018 bear market, we saw similar trends back then. The ICO bubble burst, tons of projects vanished into thin air, and Bitcoin lost about 85% of its value from its peak in late 2017. Fast forward to 2022, and we saw Luna and the FTX collapse ripple through the market. Each of these crashes taught us valuable lessons, mainly that speculative bubbles don't last forever, and only the strongest, most reliable projects survive. The difference here in 2025 is that this crash is driven more by external factors, regulations, macroeconomics, and liquidity issues, rather than just internal overexpansion. This makes it unique, and perhaps even more daunting because it reflects how crypto is now tied to the larger financial ecosystem, for better or for worse. But one thing that remains true, crypto markets are resilient. History shows us that after every collapse, the market matures and finds new ways to rebuild stronger foundations for the next bull cycle. And that's what we'll explore next. What's next for 2025 and beyond? What's next for crypto? Alright, now here comes the big question. What's next? What can we expect for crypto in the aftermath of this crash? First, we believe regulations will play a pivotal role. While regulations can seem scary, they also provide opportunities to legitimize the space. Governments around the world are working towards clearer frameworks, which could bring much-needed stability and attract institutional investors back into the market. Reduced systemic risk would be a huge win for long-term growth. Second, we are likely to see a consolidation of the market. Weak, speculative projects that lack utility or a clear mission will fade away. But this is a natural part of growth, as it will leave behind only high-quality projects with real-world applications. Blockchains focusing on finance, healthcare, and AI integration, for example, could emerge as leaders in crypto's next chapter. Third, innovation doesn't stop. Historically, bear markets have been breeding grounds for the most important developments. This is where founders, builders, and developers focus on solving actual problems rather than chasing short-term gains. Who knows, some team of developers somewhere may already be sowing the seeds of the next Ethereum moment because of this downturn. And remember, as dark as things look now, it's important to note that market downturns eventually reverse. Bull markets and bear markets are cyclical. Even if it takes time and patience, new opportunities will arise. What should you do as an investor? Okay, so what can you as an investor do today to weather this storm and potentially prepare for what's next? Step number 1, stay informed. Being educated about the factors playing into the market crash and closely following regulatory developments can give you a significant advantage. Keep up with trustworthy crypto news platforms. And of course, follow channels like ours for expert breakdowns. Step number 2, reassess your portfolio. Look at your holdings and ask yourself, are the projects you're invested in likely to survive this bear market? Focus on tokens with strong fundamentals and broad adoption potential. This could be your chance to weed out speculative assets and invest in long-term winners. Step number 3, don't panic sell. It's tempting to cut your losses during a downturn, but emotional reactions rarely lead to good decisions. Instead, take a step back, analyze the situation, and make calculated moves. Markets have historically recovered, and selling at the bottom often locks in losses that could have been avoided by staying patient. Step number 4, consider dollar cost averaging. If you believe in the long-term future of crypto, this crash could be an opportunity to buy into solid projects at lower valuations. Of course, only invest what you can afford to lose, and consult a financial advisor if needed. Lastly, diversify. Crypto is an exciting space, but it's just one part of a broader financial system. Balancing your portfolio across multiple asset classes, such as stocks and bonds, creates a safety net for financial security even during downturns. By keeping a level head and employing these strategies, you can navigate the volatility of the crypto market with greater confidence. Remember, investing is a marathon, not a sprint, and informed, thoughtful decisions often yield the best results over time. Stay informed, stay prepared, and stay patient.